Welcome to the Ranchonomics Podcast, where we empower you to build a better ranch and transform your operations into a thriving business. I'm your host, John Haskell. Let's get started. All right, welcome to the Ranchonomics Podcast. I am here today with Wally Olson, my good friend, and Ryan Noble from down in Colorado, and we are going to talk about all of the wonderful things that have been happening in the market and things that may, in fact, happen in the market. So, Ryan, welcome to the podcast. Glad to have you here.
Hey, thanks, John. Really appreciate the invite.
You bet. Give us just a quick background on yourself and kind of where you're at, what you do, that sort of thing, and then let's jump into it.
Yep. So we're out here in Yuma, Colorado. We're about 120 miles almost straight east of Denver, out by Kansas and Nebraska. So
the part that kind of looks like the tropics, right? It's real green there and always lush.
Yeah, we're just a continuation of western Nebraska, the Texas, Oklahoma panhandle. We're right in that strip. Sometimes I think we're in a pretty good spot, and sometimes I think we're in a rain shadow of the Rockies. You just never know. So if you don't like the weather, wait 10 minutes, and you'll probably wish you had what you had back.
Yeah, very good. You've run a pretty good operation down there, and you have tried, as you mentioned, you've tried over the years to really get better at things and kind of learn and understand what Wally Olson's trying to tell all of us. So I appreciate your efforts as a translator. And we're going to jump in today and talk a little about inflation, deflation, and appreciation and depreciation, which are terms that Wally's used a number of times. I want to start with a real important clarification that when we talk about depreciation here, we are not talking about tax depreciation. We are talking about the changes in values in an animal. And I think when we talk about inflation and deflation, we're talking about the market and how it influences prices. And when we talk about appreciation and depreciation, we're talking about change in age, weight, class, that sort of thing that drive the price of an individual animal up and down through the course of its life. Is that a fair place to start?
That's a great place to start, John.
Excellent. All right. Well, with that, let's jump in. Tell us your thoughts.
Alrighty.
How have the last few years treated you?
Well, as with most cattle producers, if you've owned one, you're making money, right? We've seen substantial gains across every part of the industry. It really doesn't matter if you're in the bucket calf business or selling high-end females or seed stock. You have seen a significant jump in the value of your animals. I mean, this is what we've all been waiting for. This is the good old days. Let's write it down. We're getting into the high mark territory, right? So I've been listening to Wally a lot and really studying what he says. And I'm going to poke Wally for a second and say, Wally has all kinds of great information, but unfortunately he speaks Okie. So we got to take a little bit of time and kind of become a translator on this. So
I've wondered if Okies agree with that or if they think he speaks Oldsburg, Kansas. And what heritage is this, really? Who understands this language?
Right.
Very few.
I really tried to dial in, inflation and deflation, appreciation and depreciation. So I do what I do, and I got my notepad out, and I just started messing around with it on paper. And, I put appreciation and depreciation across the top and inflation and deflation on the side. And what I figured out is what I just talked about. We've had a great amount of inflation in the cattle market, through every sector, just historically high prices. What I've come up with is just a spreadsheet. I took every bit of information. It's all Wally's, and I just caught it in this spreadsheet, and then I threw a little color coding to it, and it really clarified it for me. And I've shared it with a couple other people, and it really helped them to kind of get their mind wrapped around this thing. So what we really need to dial in here is that basically, if you've been in the beef business, you're probably having record profits today because of inflation. It's not because of we got an A number one business plan or anything. It's mostly just due to we were in the right business at the right time through the right period, and all classifications of cattle value have risen at a pretty rapid and steady rate.
Good. So let's put some numbers to that as an example. Now, not everyone has benefited from this because of drought and that sort of thing. There are always regional differences. But if you take our area for an example, and I think, Ryan, you would be similar, 3 years ago-ish, you could buy a heifer, like a 600-pound heifer for about $900. And right now, and that'd be like a number one, a good quality heifer, maybe not the best heifer, but a darn sure good one for $900. And right now, that same heifer is bringing anywhere from $2,000 to $2,500. Is that fair? And in some cases more. So that would easily be an 2 to 3-fold, 2.5, 3-fold increase in just that heifer. If we take cows, a couple of years ago, you could buy a good, a good, not great, not terrible bred cow in our region for $1,200 to $1,500. And those same cows, I think, are now in the, 35 to, we've seen $5,000 range. Is that fair?
Absolutely. Yep.
Okay. So what we are seeing is, if let's say we owned the exact same or one just like her 600-pound heifer each year of the past 3 years, through doing no change in management, no change in marketing, just holding that same type of inventory, our asset value would have increased by 3 times or 2.5 to 3 times just based on extrinsic market forces, correct?
Absolutely. Yep. We've seen a significant run up.
So it doesn't have anything to do with my management, doesn't have anything to do with, my brilliance, my grass management, any of that. It just has to do with extrinsic forces.
Absolutely. Yep.
Great. Okay. Good. Thank you. All right. Now continue on. Excuse me. So that we are talking about as inflation, meaning the price has gone up.
Yep. So just to bring that home to all the housewives listening, what did a bag of groceries cost us 4 years ago? What does that cost us today? Exact same deal. You're buying the exact same goods. They just have a much, much greater price point.
Yeah, and that's perfect. And I do want to emphasize that in so many places, we've seen that across the board, right? Since the pandemic, especially, everyone has become very familiar with inflation. We have largely lived in the United States without a lot of inflationary pressure since the early years of the Reagan administration, right? After they sort of got prior policies changed so that inflation was not such a runaway problem. We saw it again during the pandemic. And I think a lot of people, it's kind of come back to their attention as a real potential sort of thief of their value, if you will.
Absolutely. If you're a blue collar job and your income hasn't rose at least at the pace of inflation, you're starting to see a negative margin in there. Your dollar just doesn't go near as far as it used to. Luckily, in the beef industry, for once, we're on the opposite side of this. Our dollar's going further than it's ever gone.
Yeah, exactly. But the dollars. I don't know about you. When we go to buy stocker cattle, $1 million doesn't go very far anymore. So, but anyway, okay, all right, keep going.
Okay, so so we've identified this inflationary period. John pointed out we've basically tripled the value of a lot of these animals in the last 36 months, which is kind of breathtaking. I think we're going to look back 5, 10, 30 years from now and say, wow, that was a historic run up, and it's almost been hockey stick. It's up and to the right. There has not been a lot of corrections, stuff like that. So then I got to looking at this deal in my little spreadsheet, and I had a few things that really intrigued me, and one of those was, at what level are we inflating? And we identified we've been 3x here in the last 36 months, which is really good growth. But also, in the best of times, how many folks are still leaving money on the table because they have animals that are in fact depreciating at the same time? Did they get a little lazy? They said, well, I'm not going to sell this 5-6-year-old cow and trade her for a heifer calf because I'm not going to give $1,800 for a 6-weight heifer. I'm not going to do it. Just a year ago, my cows weren't even worth $1,800. So why would I do that? So maybe they've rode a few of these cows over the value cliff, we'll call it, and they actually have had some cattle that are depreciating within their cow herd that normally they might have parted company with or traded into some other form of livestock. So what my graph helped me to do personally was to take a good long look and say, okay, if we're wanting to pull some big levers in our business, this graph will kind of help us identify A, what's really making money, and B, what, probably more importantly, what areas should we stay out of, right? So let's talk about depreciation and appreciation for a second. So appreciation is just adding value, right? Like John said, it's one day it's weight. Maybe we take a heifer calf to a bred heifer, or a shortbred cow to a pair. Whatever we're doing, we are adding value. Maybe we're cutting a bull calf we are just adding value. It is worth more dollars through management than what we had. Depreciation, on the other hand, is 6 months or a year later, the sucker's worth less money due to management, not the market, than it was the day we started. Some examples of this could be a pair loses a calf, or a cow comes up open. Death loss is probably the biggest depreciation of all, right? We go from a living animal to a dead animal. That's a pretty harsh one.
Hard to go lower than zero, right?
Right. Yeah. Well, if you have to pay somebody to haul her away, I guess you're almost in the negative. So,
not to say you can't, but it's hard.
Possible and plausible.
Work at that one. Yes.
That's right.
Here's the truth. Every ranch is a business, and your numbers should work as hard as you do. At RanchRight, we help ranchers get control of their finances with systems designed specifically for ag operations. From bookkeeping and reports to coaching and strategy, it's all customizable to what you and your operation need. Stop guessing and start managing with power. Learn more at ranchrightllc.com.
So anyhow, we get back in the spreadsheet. What I've really discovered is, if you really want to, first of all, transition your business into some pretty healthy profits, and I'm sure John's seen some of the deviances in his ranch, right? Because he gets to look at a lot of people's books, but there's some pretty big levers that have been pulled in the last 36 months, because we have classes of cattle that they've all all inflated. But if some of these cattle have really appreciated at the same time, that's where we're getting into some 50, 75, 100% returns, which is pretty darn exciting. On the flip side of that, if we have a very strong inflating market, but we're not being prudent, doing our homework, keeping track of our inventory, making sure to keep the cow herd young, trading into something that's got more margin in it, we could be depreciating cattle at a fairly rapid rate and really losing a lot of advantage that the inflation has brought to us. So let's say we took let's just play one out right quick. So we took these $1,500 cows 2 or 3 years ago, and they were 4 or 5 year olds, right? Just front end good cows for $1,500. And over 3-4 years, we've turned them into 8, 9, 10-year-old cows. We're starting to get a few short solids, broken mouth cows. The opens are starting to show up a little more. They're just nearing the end of it. Here's the problem today. This open cow was, at the peak of her life, but we've allowed her to depreciate. She might not even buy a 600-pound heifer calf back with her coal value, because we let our management go and did not pay enough attention to how fast they were depreciating, while at the same time these other cattle are inflating so fast it almost put us at a disadvantage, because we just forgot to pay attention. We just rode the coattails of inflation, and all is good. We might have even got distracted and started buying trailers and pickups and all these overheads that saved us a little bit of money on taxes, when we should have been dialing it in, really going to battle on depreciation like we always do. And we could have really changed the dynamics on our spreadsheet.
Good. So I want to emphasize a few things you're saying, and let's go a little further with that $1,500 cow that you bought 3 years ago, because she might be worth $2,200 to $2,500 right now, right?
Yes.
Okay, let's say she's worth $2,200 now, just to kind of flesh this argument through. Even as an open cull, right? I mean, she's basically worth almost $2,000 right now. So that cow right there has gone up in value by $500 to $700, right? And so I've heard people multiple times say, the cows aren't depreciating right now; they're going up in value. And the problem is that is incorrect. I love the idea that a rising tide lifts all boats, right? But this is a case where you're getting a baseline market lift, right, that is giving you that $500 to $700. But relative to a heifer calf, like you say, you've actually moved backwards, right? Instead of there being, let's say, a $600 difference back to a heifer calf, now basically, just like you say, you might not be able to buy a heifer calf, or you could squeak one out with just the proceeds from that cow. And so this is why we have a few things here that are so ridiculously important. The first one is the numbers don't matter, right? We always want to be looking at relative value. And this is why looking back is so dangerous, because it cuts equally badly when you go up as when you go down. You mistake the value of things, and you make real mistakes in your decision making if you know too much about what you paid, right? So the relative value between a good, solid 4 or 5 year old bred cow and a heifer is very important to understand. And there literally are times when those two values could be the same, right? Because of market forces, right? The sort of change there gets pretty flat, but that's not the normal case. But we always want to be paying attention to relative value because that is the only thing that keeps us from sort of misunderstanding the price. Because the price and the value are two very separate things. And the market is constantly giving us feedback on the value of those, right, through the price. And the relative value becomes very important. The other thing here is, just as you say, and we've seen cases, just as you allude to, with very, very high returns, and we've seen cases with okay returns because we slip and let those things get older. But the bigger problem with that, as much of a missed opportunity as that is now, the biggest problem with that is if and when the market changes direction, those people that have let those herds get old and have kind of not done the turnover that they need to keep themselves on the sort of forefront of that value creation, that's when those businesses go backwards at like a much faster rate than a business that has kept its herd young, right? That has kept replacing with undervalued animals, that sort of thing. So these are all super good points that you're making, and the illustration as you're describing it is really, really good. So I hope people understand this because the consequences are huge. And it makes me sad always when I hear people say, well, and we have cows that we own that have done the same thing. They haven't, quote unquote, depreciated. Well, you're mistaking depreciation for the inflation, deflation. There's a reason why we separate those two things. And I'm super thankful for Wally for starting this discussion years ago, because you've got to understand how those two things play against each other.
Right.
One thing
Go ahead.
One thing you can't do is, like you said, looking back, but you have to study inflation and deflation as point in time. And like right now, if you have, there's a lot of, there's getting to be more and more $5,000 cows out there. There's lots of $4,500 cows. So the deflation or the depreciation is higher now than it was in the past. Now, granted, the cows that you bought for $1,500 and selling for, there is in theory no depreciation there. But when you look at relatively point in time, there's huge amounts going on, and people don't track that.
And this is why we put such an emphasis on inventory value, and we keep that very dynamic. I am kind of against the just put your cow at an inventory value and leave it there forever. There are lots of banks that do that, some other places. But what we really want to do is when that inflation happens, we still need to manage our depreciation and appreciation, okay? And that's why we want to be very aware of what those inventory values are, because we want to capture them. I don't just want you to watch your balance sheet asset category go up and up and up. Like, that's nice that's that happening, but you've got to convert it to economic profit and ultimately to cash to actually have that drive your business forward in the future. The part you convert to retained earnings is the part that has the ability to compound over the decades of your career.
Yep. That's an awesome point, John.
Because the market giveth and the market
taketh
away.
away. That's exactly right. So we look at that $2,200 cull cow and we think, man, that's awesome. I kept her as a heifer calf. She's worth $700. I tripled her value. But that's looking backwards. Looking forward, you have to buy a $2,500 calf. Then you have to spend another $800 into making her a bred heifer. Then you got to run her for another year before you can sell a calf. You're going to have easily $4,000, $4,250 before you have something to sell. That's a negative 50% loss on your balance sheet. A lot of cash costs, a lot of opportunity costs, a lot of time costs.
Yep. There's another approach to this that people use that I actually have come to appreciate a lot more. They look at their replacement cost, right? What does it cost me to replace a bred female? And this will give you good insight into the same thing. Okay, it's a different way of looking at it. It's a little more convoluted than the way I like to think about it. But if you are selling a cull cow and replacing her with a heifer, you are often losing money. there, right? You're selling the cull cow for less than the cost of the heifer plus her development, all that. And that's just what you described right there. But when we look at selling a good pregnant cow and replacing with a heifer, often we're positive there, right? We're generating profit in that trade. I listened to someone this weekend talk about, oh, well, when we're in the cow calf business, we're usually selling calves. What we see over and over again is the most profitable cow calf businesses are not in the primary business of selling calves. They're primarily in the female business. And there's so much interest about the money that can be made in seed stock, and everybody focuses on bulls and rams and that sort of thing. To me, the money to be made in seed stock is all on the female side because the volume is so good.
Yes. Well, kind of hard to explain in my opinion, but if you don't pay attention, if you're not evaluating your herd at least twice a year, I believe, in my opinion, you're probably leaving $300 to $500 a cow a year on the table. And you take that off a pretty sizable operation, and this could be the greatest side hustle in the world: is let's sell our cows when they're 3 to 5 years old and replace them.
We might have to do another episode where you walk me through your valuation there. I like that. That's a cool way to think about it.
Yeah, it's just by changing our management 20 degrees to the right, we could literally add six figures to almost any ranch overnight.
Yep. Yeah, we see something very similar. Love it. All right, good. What other thoughts? Let's get wrapped up here on this. Ryan, I love the illustration you made. We will try to make this spreadsheet that Ryan's made a picture of it available in a link on the podcast. Ryan's the one that made it. His name is on it. It's a great illustration to help you think through the different levers that cause, the change in price in your business. Any final thoughts from both of you?
To me, this is a big deal if you're in the cow calf business. I mean, it has made a number of people that I know of that's changed their outlook be very, very successful. And it does not take, you don't have to buy another ranch, and you don't have to spend $100,000 doing it. It's just a change in mindset.
Yep.
Two things on this, John. First of all is, we're getting into a time where we've all got more capital involved in this game than we ever have in our lives by a long ways. Me personally, it just blows my mind what our daily burn rate of cash is and the amount of equity we got and capital tied up. But second of all, everybody's worried about when we drive this thing over the cliff. 2013, 14, 15 just put a lot of smoke in a lot of people's lungs. We all got burned a little bit one way or another. It was so fast. I think we're on a different trajectory, but the cattle market is not going to ruin the cattle market this time. It's going to be an outside force, a black swan, a political gesture, something along those lines. But what we need to just make sure is have a plan that when we look at this spreadsheet, that when this thing does turn and deflation does happen, and it will, we all know that we can ride out quite a few storms as long as we are keeping our appreciation at a greater level than the deflation is going to happen. We cannot predict at what rate this thing is going to deflate. We hope it's a nice, smooth final approach, like a great plane flight. But
because that happens a lot, right?
Yeah, right. But anyhow, just looking at that graph, basically we need to stay out of the bottom right-hand sector. We got to stay out of that red, and the only way we can do that is to make sure we're in a enterprise that's got enough margin to outpace deflation. So if we buy a set of cows, and like Wally says, never lock up. If we lock up on this set of cows, we could be looking at 30, 50, 70% losses, maybe more. So
the cool thing is even in the deflationary period, that appreciation can outpace that, right? We can actually do better than that. And the cool thing to me is it is our education, our learning, our personal development, our change in perspective that drives that. It's not the market, it's not the weather, it's not our neighbors.
Absolutely. And I'm in a executive link board right now, and we're all just trying to brainstorm how to ride this thing over when it happens. So we'll get it wrong, but at least we'll have gone through the planning process several times. We've thrown a lot of hedging strategies out there. And once again, to quote John Haskell, hedging makes us great break-even producers. It really does. We spend so much money, especially now, to try to hedge these cattle. Well, let's look at this. Our greatest hedge is just making sure we're in the right enterprise that'll outplace deflation. I think it's that simple.
And without making it sound too simple, the same strategy that gets you a lot of profit in a rising market actually makes you very profitable in a falling market. And that when I really came to terms with that part, it's like, oh my goodness, it's almost too simple, you know. And now there's a lot of nuance to it. You've really got to understand a lot of depth there, but it is amazing how well it works both directions. And when I look through, you know, people that have done this a long time, you know, we find that people like Wally Olson are actually not the most profitable in these years. They're most profitable in some of the more difficult years. So,
well, and part of that is just because there's getting to be some blue sky in some of these cattle markets. There's not a lot of margin to be bought. So,
yep. All right. Very good. Thank you both, gentlemen. I really appreciate that. We went a little long. I hope people will stay tuned for this episode. But Ryan, so much good stuff here. We will share this picture in our show notes. Wally, I cannot ever tell you how thankful I am for what you've beat into my head over the years. There was quite a while in the early 2010s where I could not understand this appreciation, depreciation thing. And you just kept at it, trying to get me to understand it. And man, I'm thankful that we have, because as you've said, it's made our family a bunch of money. It's made your family a bunch of money. And we've been able to share it with lots of others who've had the same exact result. So thank you. I'm eternally
Wally.
indebted to you.
Like I tell everybody, just send me 10%, please. No, I'm on a fixed income.
Whew, that's going to be a hard check to write here, Ryan. I don't know.
It might be okay. We'll need a serious 1099 and some tax information there, Wally. So, yeah.
Well, that's going to make Walter upset. So anyway. All right. Well, thanks again. And we will talk soon, Ryan.
Thank you.
Thank you for tuning into the Ranchnomics podcast. We hope this episode helped you win today. If you enjoyed this episode, please subscribe and share it with a friend.